For TraderInsight.com, I'm Adrian Manns, and let's review what happened in the first hour trading pit on Monday, May 7th, 2018. From the Fastball XRV trading plans, we had a trigger almost right off the opening bell in TWOO. Now, this one looks a lot easier than it was. The trade around the opening bell was very thin, and as you can see here on the volume histogram, there was very little back and forth trading going on right after the open. And what happened here was this spread was about 40 cents. And although we had the trade sitting out there at about $88 per share, no fill on this first move up and through. And then when it came back down, it came all the way down to the worst possible slippage that I was allowing, and I still didn't get filled right here. So it didn't pick me up. It did go straight up to the profit target. Some of you said you got it, and that's a function of whether or not you got elected on something like this. This one was just really, really thin, like I said, on the open, and sometimes that's just the break. So I missed this, but TWOU, TWOO Incorporated, made it to the profit target in the first hour of trading on Monday. Next up, we had Analog Devices Incorporated, ticker symbol ADI, and in this instance, we got filled right after the opening bell at this 90.34 entry line. So 90.34 was the trigger line. We got filled just up above there, and the stock immediately started traveling in the direction of our anticipated trade up towards the 91.35 profit target. I had an 89.40 stop on this initially, and after the first bar of trading, I moved up just right under this range from the Friday session. So I'm allowing just a little bit of give underneath this cup down to $89.79. And then in this instance, what this did was got up to just about 50% of the distance to the profit target. That triggered my stop to move up to $90.34. Lo and behold, look what it did. Came down, popped me out, and then in the first hour trading pit, Julie called an audible, got us back in on this bounce at 90.34. That was because of the confluence between where price was bouncing here and this overhead resistance and the morning support and resistance, and used a $90.82 profit objective based on the 50% to target level plus the fact that earlier we had reversed right there at $90.95. So that's a little bit more of an advanced kind of an entry and exit on ADI than would be typical, right? Normally you'd just be looking to get in at the entry price on a dip below the entry price, then get out up at the target. But since we did talk about it in the first hour trading pit, and since we're going to spend quite a bit of time talking about this kind of setup at the boot camp in Miami Beach, I thought this was a good time to put this up here and point to the factors that led Julie to make that decision, make that call, and get us back into the ADI trade. Next, we had ePay, Bottom Line Technology, and in this case, what we had was an entry that was above our entry threshold by enough that it got us up into the 50% to target range. And when that happens, this is what I was telling you guys about in the first hour trading pit before the market opened this morning. I said, hey, look, we're going to have a gap. And we have a 50, 60, 80 point, maybe 100 point gap to the upside. What we want to do is go and look at our trades and make sure that if something opens at the point that it would normally be time to move the stop to break even, that then that doesn't become the threshold for an entry. Because if we got into this at the price that we wanted, what we would want to have happen when this got to $43.97 is that we pull our stop up to $43.27 and exit the trade if price came back down again. So there's really not a circumstance where you would have this kind of an open and then say, if price falls down through my entry price, that's where I want to get in. So the way to avoid this is to set up your conditional orders in a way that says price has to first trade around or below this 43.27 threshold. You can use anything up to your allowable slippage to set the threshold that it needs to trade at. But in order for my order to go live, it's going to have to trade down here and trade up, not start up here and then trade down. So no trade on Bottom Line Tech. CBS Corporation was another one that opened and then moved promptly in the wrong direction. This one never got up to a trigger price. So this is an instance where it did hit the threshold to get that order to go live because it was below 53.29 on the open. So now in my software, the condition is met. Price is less than or equal to the threshold that I've got, somewhere just below the Friday high. But then price keeps moving down and never comes up and triggers the other part of the condition, which is the stop that says that if we get back to $53.29, I want an order to go live and get me in on trade up above here. So CBS was a no-show on the Monday session. Pembina Pipeline Corporation, ticker symbol PBA, got off to a slow start this morning. Our stop on this was down at $33.68. The stock opened for trading at $34.08, traveled lower, didn't trigger our condition, and in this case got down and gave us a little bit of a test of the $33.68 stop level that we had, and in my case confirmed that that was going to be a stop that I was going to be happy using on the trade. Not going to be happy necessarily if it hits it, but I'm going to be content that I've got a stop in the right place. That's because the stop is based on this little belly of a move on Friday. And when it comes down and makes a test of this level exactly, we get the bounce. And again, this is why I'm saying when you guys are setting those stops, make sure you're not using what would be a logical target as your stop. You want to go just a little bit beyond where you think price is going to inflect, and then that should keep you in the event that price moves down there and just tests it and winds up moving higher. We had the move back up to the 34.04 entry line. The trigger event happens right around here, and we wind up getting pulled into this trade for a move then up to the 50% to target line at $34.29, and then over the course of really a couple hours finally got up to that $34.56 target. So we had lots of conversation about holding that target firm in the first hour trading pit. Most of you did. This stock was on both the XRV and the Around the Horn trading plans, and it wound up being the payoff for the morning with about 50 cents per share on PBA. And when added to the analog devices trade, that gives us a nice little gain on a Monday morning, which is sometimes a little harder to eke out than booking a positive result during the rest of the week. PCH was another no-show. This was on the short side of the market. $48.64 would have been the validating price this morning, while $49.37 was the level that I used as a stop based on what happened on Friday. On Friday's trading, I was very aware of this bounce that happened when price came down into the 49.30s and the 49.20s. And when I saw this bounce, I thought this is probably a place that I can expect an inflection in the other direction as well. So we had the stop set at 49.37 and had a test right off the open. This is a little bit close for comfort, but it did try to move up and then reverse lower. If we would have been triggered in at 48.64 and had some kind of an oscillation between these two bands, I probably would have moved that 49.37 up a little bit into this range so that we would have caught this support and resistance as well and given it just a little bit more room to breathe. As it turned out, even that wasn't enough, right? The stop, probably the real stop, would have had to have been up here just to keep you in through this swing. But again, the bias on this thing changed. We didn't get the move down into the range, and sometimes a little bit of Monday morning quarterbacking is easier said than done, because the reality is you would have had to have a stop all the way up here just to keep you in this position if it would have ever triggered. And in this case, once again, it didn't come really all that close to getting us down to the trigger event for the trade. So PCH was a no-show on the session. And for the XRVs, finally we had SWKS, Skyworks Solutions Incorporated. This did not trigger me in. It did trigger in some of the folks who were on the non-directed broker platform. So those platforms can sometimes, since they're shopping that to their market maker, get you a faster fill on this kind of a morning than the directed software does, the direct access software. And that seemed to be the case. At least that's the only thing that I can think of, because I never got an order trigger on this. The order did go live on the violation to the upside of $96.30. So my criteria for the morning was Last price had to be less than or equal to $96.35. And in fact, the stock made it as high as $96.45 in the morning. And then it had to trade through $96.40 from below in order to trigger me in with a maximum slip up to $96.55. So that's just the way that the order was set up. Now, I don't know if that's the reason that I didn't wind up picking up a stray fill on this one, or if something else was at work. If those numbers just didn't come together, then that's why I wouldn't have been picked up and traded into this. But in any case, had I been put into this trade, I had a $95.50 stop loss on this one, and that was based on this range going into the Friday close and all this volume up in here that really said if it comes down and starts trading through and gets down underneath here, it's probably going to wind up doing just what it did, which is move down to the central pivot. In any case, no trade for me on SWKS. If you did get triggered into it, then a logical stop for it, $95.50. Finally, in the first hour trading pit this morning, we had two live calls. The first was in CTSH. This was a Baltimore chop opening gap on a news announcement. We had this nice big move to the downside this morning, and then really no opportunity for the fade, and that was because 78.61 would have been the entry threshold, and 78.72 would have been the first logical objective. We would have been looking to get long above the high of the second bar, and then the target was only a few cents away at the open of trading for the day. But lo and behold, a few minutes later, we went back to a trick that we've been using for years in the trading pit. It's something I call a trapdoor. And when we got down to the low of the morning at $77.58, we had the opportunity to enter a trend following position that got us short at $77.55 and gave us a switch hitter expansion ratio on a fib move down to $76.95. So nice reason for an entry with the trapdoor. Nice logical place to put a profit target. Darren is really good at grabbing these things when they happen. $77.59 down to $76.95 or so. And this is a trade that most of you can wrap your head around, especially if you've been to boot camp, and we've already talked about a lot of these principles. This should make a lot of sense just on the face of it. And really most of the battle is figuring out where to put the profit target so that you know where your exit is, not just the entrance on this simple trap door. Another Baltimore chop opportunity came along in Tower Semiconductor, ticker symbol TSEM. This one came in the form of a second bar entry. We called it live in the room. The position was initiated on a move up through $22.71. In this case, we used the peak to trough of the entry bar to get us a fib expansion, at least to give us an initial idea about where it might be going. $23.26 up to about $23.35 was the first place that we were looking. And then, of course, the move up through $23.26 gave us the opportunity to catch a much larger move to the upside. And ultimately, this one wound up handing over more than $1 per share. Now, unfortunately, what I missed out on was the opportunity to ride this all the way up to that $26.14 pivot. If any of you saw the movie Office Space, I'll call that a bad case of the Mondays right there. But there was a good reason to stay in this trade and to just draw a trend line. If you used a simple trend line to follow what was going on, then by the time you got to this pullback, you had every indication that the stock was probably going to start climbing higher and follow this line on its way up to that 26.14 target. Another trick that we talked about in the room, what you can do in order to contain a trend like this, is to add an 8-period moving average to the chart. Of course, the early data on the 8-period simple moving average isn't going to yield a lot just because it's coming in from the Friday close and has to go all the way down here. But then as the stock starts making this trending move higher, what we discussed was, since some of you had managed to stay with this trade through this move right here, once it started moving higher, that 8-period moving average, as long as it's not violated, kept you in all the way to that trend following target at $26.14. Like I said, I got out of this with what I thought was a victory, about $1 per share down here in the first hour trading pit, and then the move up to here was missed for me. But those of you who did manage to stay with it, there's a couple tools you can use that give you a really nice indication of where this might go on the upside. And then, of course, you could also have gone and given yourself an expansion target using a fib expansion, and that would have got you up into either $25.46 on the 150% expansion or up to $25.72 on the 161.8% expansion. Just depends on how you wanted to play it. In any case, Monday was a little bit of a mixed bag, a little bit slower than some of the days that we've seen over the past several months, I'm going to say, but typical for a Monday. Sometimes they just don't come and go gangbusters. You have to go hunting for the opportunities. In this case, for all of you who showed up in the first hour trading pit, we were able to ferret out some nice opportunities, and I'm certain that the rest of the week is going to hand them over a little bit easier than this sunny Southern California Monday morning did. But good job following the discipline, you guys. So if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.